It's hard to be bullish in 2022 because after 10 months, the markets are still making new lows, right? The bulls, they're holding out for the plunge protection team that never seems to come. But have they finally arrived? And specifically, have they finally arrived on October 13th? Which, if you've been listening to my videos, that's been my favorite date that I talk about. Now, today, I'm going to show you why, for a lot of reasons, why that is a significant date for 2022, because I believe that is 2022's low for the year. But notice I don't say anything about 2023. That is a totally different ball game, but we'll get into that a little bit later. Okay? Ironically, I can't make the fundamental case to you why we should be rallying. You guys have seen the news. You've seen the layoffs. You see sticky inflation, right? It's not coming down by much. It's coming down a little bit, by much, not by much. You've seen in the news that a lot of pundits are expecting like a 90 to 100% recession in the coming year, right? So there's not a single fundamental case I can make to you why we should be rallying right now. But instead, I'm going to make a compelling mechanical, mathematical case why we are. I'm going to prove it to you by showing you the charts, the MACD patterns, and the patterns that keep recurring over and over again, okay? But stick around because I'm also going to show you a little secret pattern that the S&P 500 or SPY has been following for the last 2 weeks. All right, so this is today's mission objectives. I'm going to be showing you how the April and August tops could have been predicted, and I'm going to show you exactly how the patterns revealed themselves before they plunged, okay? And I'm also going to show you the June and October bottoms, right? The June bottom and the October bottoms, okay? Then we're going to dive deep into the S&P and NASDAQ 4-hour and 1-hour charts about on the ascending side, June through August, descending side, August through October, and now back to the ascending side where we are today, all right? Okay, you could just go ahead and take a screenshot of this. We're going to get more into details about this. I won't, these numbers don't mean anything to you right now just because they're sitting here in a bullet point, but take a screenshot of this. Refer to it later because this is important observations about the MACD at the 4-hour and 1-hour levels for the S&P 500 and NASDAQ, okay? All right, here is the secret I wanted to tell you about that the S&P 500 actually has been following. Specifically, it is, for the last 2 weeks, it has been honoring and respecting the gray SMA simple moving average 20, SMA 20, gray SMA 20 line, and obviously, as it always does, the EMA 50, okay, exponential moving average 50 line, red line. On a previous presentation, I drew in the weekly EMA chart 40370, which is right there. See that? Right there. Okay. Now, specifically, let's just play this out on the SMA 20 line. So look at the price action. Okay, so this is a 65-minute chart, by the way. So I encourage you to throw up the 65-minute chart right next to side by side your favorite intraday charts that you like to use. Okay. Now, let's start from 2 weeks ago. Notice how it comes down below the EMA, but comes back up, gaps down. See, all of this is relative to the SMA and EMA lines. But right now, it's more following the SMA 20 than it is the EMA, okay? Now, so you check this out. Gaps down, consolidates, consolidates, boom, comes up. But it's consolidating. See that? Comes up, comes back and back tests against the SMA 20, comes up, tries to back test the SMA 20, fails, gaps down, comes over under the EMA 50. See that? Comes down, tries to come back and kiss the SMA 20, comes down, breaks out, fails the back test on the SMA 20, consolidates under the SMA 20, explodes up above it, back tests again against the SMA 20 right here, consolidates, falls down. This is on Friday. This is Friday. Falls down, but it gets buying pressure to come back up above the EMA 50 and the weekly EMA, by the way. Now you start to see the correlation. The weekly 403.70. This is critical because now you have the weekly and the 65-minute EMAs converging. See, that's like do or die now. See what I mean? I said this a couple of nights ago, a couple of videos ago. I said, you must hold 403.70 or it's over. Or it's done. It's done. Okay, the rally is done. And look what it did. Boop, 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 boop. It held it. Okay? And look at that. See how it's hugging the SMA 20? Look at that. I mean, that's not coincidence whatsoever, guys. Not at all. Okay? And you're going to hear me emphasize this again. Don't worry at all about the absolute numbers here on the right hand side. You know, SPY 405, 403.7. Only worry about it as it relates to the EMA or SMA. That is my recommendation to you, because as you know, the EMA and SMA changes, right? It's never just static. So you can't, if these EMA and SMA lines change all the time, they're never static, you therefore can't keep your mind static to a number. You can't marry your mind to a specific number over here. Like, for example, 40, well, I'll just make up a number. 401, okay? 401 right here. I'm just making it up. I'm just grabbing one out of the hat. Okay, what does that mean? That doesn't mean anything because it just blew right on past it. See what I mean? It just exploded right on past it. You know, it came down and it wicked down here, but okay, so what? It pushed right back up. It's heading back to its SMA line. It's where it's going. And the SMA line happens to be, as of Friday, 406.11. Okay, it happens to be that, right? So that's what I wanted to show you. The 65-minute chart, SMA 20 line is what SPY is tracking to. Okay, so just wanted to get that out there for you, since you guys like to follow SPY. Okay, this is a great chart. I'm going to zoom into certain points because I know it's kind of small to read. This is the June. This is June low right down here, right here. That's June, and that's today. Okay. Now, I already talked about it in the previous slide when I said price action is meaningless. Remember, I said, 401. Okay, what does that mean though? It doesn't mean anything. You need to look at instead the SMA gray line or the EMA 50 red line. Okay, just like VIX. I was saying this last week too. I said VIX to 20, VIX to 20. Okay, what does that mean? It doesn't mean anything. It doesn't mean a thing. Okay, because VIX is at 1908, right? So the people who are saying VIX to 20, VIX to 20, be careful, be careful. So okay, now what? That didn't help you place a trade, long or short, right? It didn't. So that's what I mean. The numbers mean nothing. The numbers itself mean nothing. Price action actually to me is meaningless. It's the price relative to the EMA 50 or SMA 20 that means something. That's meaning. Because now you have relativity, right? Remember old Einstein's E equals mc squared, the theory of relativity? It's relativity. It's where are you relative to your own line, right? That's what I'm talking about. So, well, before I kind of zoom in, I'm going to ask you maybe a trick/rhetorical question. What one single thing is glaring at you? This is kind of a trick question. What one question can you ask for this whole chart from June lows until today that you're looking at? What is the one question that you can ask that is a yes or no question that will guide your trades from June through today. June through today. What's that question? Okay, I'll spare you the agony. That question. Oh, maybe it's not showing up. Okay, there we go. Upper left-hand corner. Yes or no? Successful backtest of the EMA or SMA? Yes or no? Okay, so what do I mean when I say that? Now let's zoom in. Okay, so this is the June low, August high. And by the way, this is the I think it's 130 minutes chart. Yes, if I'm not mistaken, it's the 130 minute. Yeah, there we go, down here. 130 minutes chart. Now, it's a yes or no question. Let's start from the June low. From the June low through the August high, was there a successful backtest of the EMA or SMA? Yes or no? Up, successful backtest, down. But it consolidates up. So the answer to this one, it's still going back up. It's trying to make that higher low there. Okay, see that? So it did. Now, it's back to, even though it failed, it came back up. And then it actually failed again, but it's coming back up. So it's trying to make 2 consecutive higher lows. Okay, 2 consecutive higher lows. But for these 2 humps, the answer is no, no, no. However, after that, it's all yeses. Backtest yes, backtest yes, backtest yes, backtest yes, backtest no. See that? That's the August peak. Backtest no. Backtest no. In this case here, it didn't even try to get it didn't even try to overtake it. It just comes up and kissed it, and it keeps falling. That's just a resounding no. Okay. Kissed it, falling. No. Tries to come back, but no. Okay. Now look at this one. Huge surge up, but ultimately the answer is no. And subsequently, no, 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 no. See what I mean? It's a yes or no answer. That's why it makes no difference at all. None whatsoever. What were these levels of SPY? The entire time it's going down, what would that have told you to do? It would have told you to do nothing. Because it doesn't mean anything. It doesn't mean anything at all. While it was falling during this time period, whether you knew your numbers right here by heart or not, it made no difference whether you knew these numbers. Because you still couldn't predict that it's going to keep going down. And you still can't predict where the bottom is. But by answering the question on the EMA and SMA lines, like, nope, you could still say, yeah, we're going down. we're going to keep going down. So it's not relevant anymore to know what level that is. It's like, it doesn't matter. We're going down. Because we went down from, you guys know this, August 16th was the peak. August 16th through October 13th. That was 2 months of failing to answer the simple question, a yes or no question. Did you fail the back test, yes or no? The answer was no. All the way from August, all the way until October 13th. And then the answer started to switch to yes. What did you pass? Well, yes, it's a different question now. Okay. Well, actually, the whole time I was saying it wrong. Were you failing the back test? Yes. But then on October 13th, starting on October 13th, the answer is no. I did not fail. I'm passing. 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 Okay? Passing. Now, this was the J. Powell mic drop on 11/2. Failed, but guess what? Attempted to break back out, come back down, make a higher low to pass again. Pass. See, it's coming down, but it's coming up, and it's passing. And that's Friday. All right, you follow me now? Okay. So, this is the weekly chart that I put out a couple videos ago. Right? There's the EMA, the weekly EMA 403.72. January, April, August, December peaks. Okay. So, August peak right here. I'll kind of mention this for now. I got more slides to show you in more detail. This was losing steam already. I'm going to show you more. I'm only going to mention it right now. This was losing steam. This was already showing bearish divergence as it was coming into the peak. This is where I'm going to get into what I talked about earlier. I'm going to show you how to predict the peak, where it's at. This was already losing steam. Okay? That's why we peaked there. But so that's August, and now we're here at December, right? We're here at December. December, we are now at that. We are now, as we all know this. August, the trend line. December trend line. I'm here to tell you right now, we are at that trend line, but we are not losing steam on the MACD. It's a different situation for December than it was for August. It's a different situation this time. Okay, so I'll be showing that to you. You know, in a little bit. Now, right now, so I've clearly showed you by asking one simple question right up there. I've clearly demonstrated to you, is it a successful backtest of the EMA 50 or SMA 20? Yes or no? This uptrend so far, since October 13th, my favorite date, the answer is yes. Right? Despite that big drop on Friday, you guys know that big drop where I was like, oh man, Dow's down almost 500 points in pre-markets. Watch out. It's still passed. It's still past the SMA 20 and EMA 50. It's still passed. Okay? So, the bears out there, I don't recommend you fight this current trend. Don't do it. I know it's easy to be bearish because of this whole year just getting smashed. But right now, the trend is not bearish. It's bullish. Okay? Don't fight the trend. Because I will say that when you fight the trend, that's whitewater rafting, by the way. You guys have probably done that a time or two, perhaps. That's like you getting in the raft and trying to swim upstream to the whitewater river. I don't think that's an efficient use of your energy or your time. Okay? Don't fight the current trend. The current trend is up. And I've just shown that to you right just now mathematically. Right? Mathematically and quantitatively. Using the entire year since the June by asking one simple question right there. The current trend is up. Okay? But when will this trend end? That's the next question, right? That's the next question we all want to know because we don't want to lose money. Okay. That's going to get into, let me show you SPY. I'm going to show you now the divergences. Okay? Show you the divergences. Now, guess what this is? April 1st. April 1st. This is the 4 hours chart. April 1st. Okay, remember this? April, August, December, the trend line. So now we are at, I'm showing you April. I couldn't show you January because the data doesn't quite go back that far because I couldn't see the prior high on January. So I'm going to show you April instead. Check that out. Red, green, red, green, red, green, red. Oh, sorry. Where are you? Is this it? Here we go. Green, red, right? Okay. Oh, I think I had it backwards. That's okay. But more importantly, as I just showed you, and this applies to April too, this is on the 240 minutes chart. Look at the back test here. It was passing. Oh, get ready. It failed here, but get ready. It's still got a chance because it bounced off the EMA. But now we're into April. Oh, try to come up. Oh, no. That's a trend change. This right here is a trend change. It was passing the whole time from March all the way through April. That's it. That's curtains right there, this moment. Or I'll just say this moment. That's it. It's over. It's over. Because now when you ask that question, is there a successful backtest? From April all the way until June, I can tell you, no. See what I mean? And that's got nothing to do with any of these SPY levels on the right-hand side. Nothing at all. Okay? So, here we go. MACD, 240 minutes. Look at that beautiful divergence. Right here. Here we go. Here's the date. It started showing divergence on 3/23. It finally collapsed on April 1st. So you had a week. So you got to wait for this to try to come back up before you really could know if is there a divergence or not. So you got to wait. You got to let the data play out. But look at that downward divergence. Right? 3/23-ish until April 1st. That's divergence. And you have the green, red pattern. And then it was the collapse. Right? Okay? There you have it. So that's the SPY April. Okay, let's go SPY August. SPY August right here. Yeah, SPY August. August 16th was the high right here, down here. Okay. I'm going to show you another slide that's even better because this is the 240 minute. I use the 240 because that's the only thing that lets me go back far enough. Okay. Any lower time frame, I prefer the 65 honestly because that's more granular. And I'm going to show you the 65 on another chart because this is August. I still have August data for 65 minute, but I didn't have April data for 65 minutes, so I had to switch over to 240. Okay. And to stay consistent, I decided to show you the August in 240 as well. All right, so that's flattening out. And not only that, this is lower than that. Okay, that's a problem. That's a huge divergence, and that's like a month apart, right? By the way. Okay, see that? Oh no, actually 729. That's 2 weeks ago. That was 2 weeks because it peaked on 816. So 729 is 2 weeks. So we gave you 2 weeks headway. But you can't tell the divergence when it's going down. You have to let it come back up to see where it peaks at relative to the previous peak. See what I mean? So you got to let it come back up. You can't, while it's going down, I can't tell you, has it peaked? Well, no, I can't tell you that. You gotta let it come back up and see if the price action. Okay, so this is okay. Here we go. Let's go up to this. July 29 here. Clearly, obviously, this price action, this price right here is higher than this, right? So let's go to this. Let's go straight down. Let's go straight down. Or, oh, we're not quite there yet. Here, let's go to something like this. I'm going to keep my cursor there and scroll up. Okay, here we go. Here we go. This is way, way higher than this, right? Obviously. But this point is lower than this. See? You could already guess, like, ooh, we're getting some divergence here. Okay? So, August. Goody goody. Red, green. Oh, wait. Red, green. Red, green. And what happens? Nights. Lights out. Go night night. Lights out. And when you ask the question again, is it a successful backtest of the SMA 20 or EMA 50? Yes or no? Yeah, you can guess what the answer is. It's just been no, a resounding no. See, this, that looks like, ooh, is it good? Is it going to reverse the trend? You got to wait for the backtest. The answer is nope. Nope. See that? So time and time again. Okay, so that's April and August that I wanted to show you by that slide. Okay. Okay, so that brings us to today. I just want to call your attention to this is S&P 500 240 minutes chart today. Look at that. Higher lows. That's not bearish right now. I'm going to be looking for something more like this. Okay? But remember, this was the J. Powell mic drop. I keep saying that, but it is. This is, and I'm going to talk more quantitatively about this low compared to all other lows. But for now, I'm just going to say for now, let's just keep the topic to divergences. I'm going to get more into quantitative about this particular low relative to other lows, okay? And why this is not bearish yet. It's not bearish, okay? But for now, that is a higher low than that. And that brings us to last Friday. So we are still tracking the upside, guys. Not only that, the price action is above the SMA 20 and EMA 50. Remember the basic question, yes or no? Are you successfully backtesting it? Yes or no? And guess what? That 500-point dive that we took in pre-markets on Friday, it kissed the SMA 20 line, and it pushed itself back up. It said, we're not done yet. Right? I mean, there's no other way to interpret this. It's like, oh no, the markets are not done. It's not over. Okay? And because we still have, I don't want to. This is not bullish divergence. This is bullish convergence. It's not divergence. It's convergence. It's the MACD is moving with the price action. That is a higher low than that. That's a higher low than that. It's still on. The rally is still on. That's essentially the takeaway. Okay? All right, now we're going to get into SPY. This is SPY futures, ES equals F, 4-hour chart. This time I want to call your attention to down here. Here's the quantitative side. Okay. For SPY, on the MACD 4-hour chart, on the ascending side, this brings us to today, by the way. This is this is the October. Oh, wait a second. Oh, I'm sorry. No. This is June. This is the June. I wanted to go backwards and then go forwards. Start backwards and then move forwards from there. This is June. This is the June low right here. June low right here. 4-hour chart. When it's ascending, the MACD on S&P futures does not drop below -20. Okay? Does not drop below -20 when it's ascending. Ascending. Okay? Notice this. This is June through August. It never dropped below -20. Okay? So let's look at the 1-hour chart. So a moment ago, that was 4 hours. Now let's look at the 1 hour. Okay, so for S&P, it's actually the same. I forgot to call that out. It's actually the same. 4 hour and 1 hour, -20 is your breaking point. on the MACD. Okay? The NASDAQ is a different story, but I'll get into that a little bit later. Okay, so 4 hour, 1 hour, negative 20 right here. Ascending BF, that's best fit. That's my abbreviation. Best fit line. I don't necessarily draw trend lines. I draw best fit lines. See what I'm saying? Okay. Now. Okay, so this is August peak through October lows. S&P futures, 4 hour. Okay, so now we're going back to now the low side for 4 hour. On the low side, you're at negative 35. If you start dropping below negative 20, if you're somewhere between negative 20 to negative 35, that's bearish. Or below negative 35, you're bearish. Okay, that's the takeaway on the 4 hour. And actually, consequently, on the 1 hour that I'm showing you here, it's the same thing. It's the same number. I find that it seems to be a coincidence. Okay, negative 20 on the ascending. You cannot go below negative 20 on the ascending, but on the descending, if you're below negative 20 and even starting to get below negative 35, that's a problem. Okay, to me it's over. Okay. S&P futures 4 hours. This brings us to from the here we go. October low through today. See that? October low right here through today. This was the one time it dropped below. That was the J Powell mic drop on 11/2. But guess what happened? Boom, back up, and it's been up ever since. Okay? See that? So, now the bottom on the 4 hours chart, which we're looking at right here actually. Yes. I didn't draw it out here, but red, green, red, green. And on top of that, so that, yeah, as you guys know, red, green always means explosion. It's about to happen. And since it's been bottoming, you can know, oh boy, something is about to happen. This red, green, by the way, came over, it was on overnight hours. Overnight hours, the night before CPI was released. The night before CPI was released, guys. Let me just kind of zoom in, just make that easier to see. Red, green. The night before CPI was released, remember that? Remember that time? Dow went down 500 points. Wick down 500. And then slaughtered the bears that day. I went back and looked at how many. It was actually exactly 1,373 points. Slaughtered the bears that day. Okay? On top of that, look at this. The MACD, this is the 1 hour. No, it's a 4 hour, I'm sorry. 4 hour chart. Higher, low. To get back to the zero line. That's a trend change. Okay? That's how you know. It creates a notch. It's a higher low. That's how you know. And it's close to the zero line. That's the bottom. That's how you know that's the bottom. Okay? So, anything else remarkable here? No, I think we are good. Yeah. As you saw in previous slides, yes or no? Was it successfully backtesting as of October 13th? Was it successfully backtesting EMA 50, SMA 20? Especially on the 130 minutes charts, because that's where it was. But I will tell you, if the answer is yes on the 130 minutes, oh, you know it's going to be yes on the 65 minute and on the 30 minute. Because the 130 minute that I showed you earlier, well, that's just it's getting its data from the lower time frames, right? The 65 minute, the 30 minute. So those are obviously yes. So 130 eventually will be yes, right? That's just how it works. Lower time frames feed the larger time frames. Okay. Okay. So that is the 4-hour S&P. Okay, for the 1 hour, as I said, it's the same deal. This is on the ascending side now. See that? Ascending side. Doesn't even touch the negative 20 line anymore down here in the MACD. See that? Nope, nada. In fact, look at on Friday. Look at that. Look at how close. This is the 1 hour chart now, right? Look at how close that is to the zero line, despite falling down 500 points in pre-market. Despite that, it says, "Oh no, I think we're good so far. So far, I'm going to say that. That's pretty good. It didn't do this, like when Jay Powell dropped the mic on everybody. See that? It didn't just like bleh. It said, no, I'm going to hang out right about here. And in fact, I'm going to start coming back up. That's bullish, guys. You can't make the argument that it's bearish because the data is not there. It's not there. Okay? So, moving on, NASDAQ, 4-hour chart. Okay. Okay. So, this is June, the June low through August peak. Okay. NASDAQ is a little bit of a different bird. On the 4-hour chart, on the ascending side, so if it's just to remain bullish, you need to stay above the negative 100 line on the 4-hour chart, MACD, right here, right there. You need to stay above that line. See that? It was bullish, 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 all the way until August. And then you said, oh no, maybe not so much. See that? Okay, so 4-hour chart, negative 100 line for NASDAQ. Now, here's the June low on the 4 hours chart. That made a lower low right here, but that made a higher low on the MACD. Okay, and now looking back, that's getting closer to the 100 line. See that? Now that we kind of see patterns looking back, in hindsight's 2020, but I'd be applying this criteria in the future. It's making a higher low close to that negative 100 line, and then it said boom, boom, boom. And then it came back and made it even another higher low here relative to its starting point there. That's a trend change. That's a low. That's the low. Right? Okay. Likewise, since this is the 4 hours chart, I put out the EMA. Here's the red line, EMA 50 and gray SMA 20. See that? It came up, tried it surged up, but then it's going to kind of come down. This is technically a failure, but it consolidated under the line, and then boom. And technically it failed again, consolidated under, and then boom, and now it's passing. Yes, passing. Yes, passing. Yes. See what I mean? It's a yes or no question, guys. So ironically, even though I tell you guys on SPY, don't worry about the number. Don't worry about the number. Ironically, maybe it's ironic. Because you guys know, you've been listening to me. I follow NASDAQ. I follow TQQQ. If you ask me on any given day, hey, what's the current level of TQQQ? I'm like, I don't know. But I can tell you where it is relative to the EMA line. I have no idea what the number is because I don't look at the number. I look at it relative. Call this I just now thought of the, I'm gonna call this applying the theory of EMA SMA relativity. I just now thought of that. That's what it's going to be called. Einstein called his the theory of just relativity, right? I'm going to call this the theory of EMA SMA relativity, right? That's what I'm going to call that. I just now thought of that. Okay. I'm going to zoom in for you guys. Check this out. I have the 1 hour chart here too, because this is the 4 hour chart up here. So I want to throw the 1 hour so it's just easy to see side by side. I prefer to look at the 1 hour when I see divergences, because it's, obviously the 1 hour will feed the 4 hour, because the 4 hour, it kind of takes a while to build out, right? It just does. It takes a half day to build out, right? 4 hours, right? So look at that. Hold on. That that is higher than that, but that is lower than that. Okay, so this was on 8/11, by the way. 8/11. You had about 5 days. You had about 5 days leadway to probably think about, I think I might want to start getting out of here. Or starting on 8/11, you can say, I want to start selling some off. Just sell some. I'll sell 25%. Next day, I'm going to sell 25%. Next day, maybe I'm going to sell another 25%. So by the time, if you don't, because I don't know, I wouldn't be able to, even looking back, I can't tell you, it would have been, the peak was on 11/16. Even looking back, I still can't tell you exactly where is the drop-off. What day will it come? I don't know. I can only tell you, it's coming. It's coming, right? So as soon as, you start to see divergences here. See that? Right here. That's the 11th, right? That's the 12th. And then it actually went to the weekend. I looked on the dates. That's why it went 13, 14, then it just skips to 15 and 16. Yeah, 11, 12th, 15th, 16th. Okay? So you start getting into the, as of the 11th on Thursday, you don't know it's divergence. Okay, so you go down and you come back on the 12th, Friday. You're like, oh, well, that's higher than that. That's lower than that. Uh-oh. Yeah, so I rarely see divergence and then the same day or the next day it just collapses. I rarely see that. Because you got to let FOMO and you got to let irrationality play itself out. That's what's happening. That's why you're letting FOMO play itself out. Fear of missing out, for those of you who don't know. You're letting it just play out. So that's what I recommend you do. Sell 25%. Once you start to see it. So this would have been Thursday, the 11th. This is Friday. As soon as you saw that, I'm selling 25%, guys. I'm gonna sell it. If you still want to like maximize your profits, right? Sell 25%. Next day, you're gonna sell 50%. Final day, sell 75%. So all you have left is 25% on your table, right? On the table. I mean, you could lose. You see what I mean? So it's up to you. Your call, guys. I'm just throwing it out there. Okay. So that's the MACD. Now it's just for real estate purposes. I didn't include the RSI, but I can promise you the RSI will also show divergence. It will show divergence. All right. I use both. I use both to confirm for me. Well, one says one thing. Does the other one confirm it? You know what I mean? But you can also get an idea. Just get an idea that all may be not well. Because now you start to see it. You start to see it kind of struggle to hold the SMA and EMA lines. Kind of. When you put it all together, when you put the pieces together, you can say, well, yeah, you are struggling a little bit. What's the MACD saying here? Oh, I see some divergence here. You see what I mean? So yeah, it's put the different clues together. That's all I'm trying to say. Okay? So that's the 4 hour. Okay, let's jump over to 1 hour. Okay, so the 4 hour, remember the on the 4 hour it's a negative 100. On the 1 hour on the ascending side, it's negative 60. You got to stay above negative 60 on the 1 hour. Okay? That's ascending. Let's keep on going. Okay, so this is a 4 hour descending. Now we're on descending. This is August peak through October 13th. October 13th, CPI. Once again, 4 hour chart, negative 100 on the descending. See that? It's like, yeah, you're not looking good. You're not looking good there, buddy. Okay? Now, like I showed you on SPY, check it out. Red, green, right? There you have it. Yeah, red, green, red. And that gave you a few days leadway. But there was an explosion coming, and boy, did it explode. Boy, did it. Okay? So, and like you saw on SPY, guess what? You saw the notch. The notch. and it was and in NASDAQ's case, it's above negative 100. Okay, that's bullish. Now I look back with analysis. Okay, NASDAQ 100 on the descending side. Yeah, see, oh yeah, negative 170. Okay, that's pretty bad. Okay, it's pretty bad. So, that's basically all I want to show you about that. 1 hour. Okay, so you know, for you newer viewers, encourage you to check this out. You know, all this red green. That's what this big mover patterns is all about. I didn't mention anything about the 1, 2, 3, but I encourage you to please check this one out too. Shifting tide. Check that out as well. I didn't talk about it today. I didn't call it out because I'm kind of staying more a little bit higher level, but you know. Okay. 4-hour chart, red carpet rally. Now, as I alluded to earlier, let's go to this. I said October 13th is my favorite day because I believe that is the 2022 low, and because it marked the beginning of the up channel, rising channel, leading to this rally we have today. Okay? Because I want to show you something. Red, green, red, green. When you draw a trend line at the top of the red, green right there, see that? And it touches this wick, right? Just draw it like that. Guess what all subsequent data points tend to touch? That upper trend line. Oh, look at that. 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 And look at that. This is like November 15th-ish. That was like after the huge surge. It went up, kissed it again, and came down. Okay? So, that, my friends, is the upper end of this channel, of this rally. Okay? This is Friday. This is Friday. We're still at the bottom of the channel. So it came down. On Friday, it on NASDAQ, right? It went down. And they were like, no, not today, bud. We are coming back up. We're going to kiss the bottom of the channel, and we're going to stay up. Okay? So we're still at the bottom of the channel. We're not back up at the upper end of the channel. But I think that's where we're headed to. How and when we get there, now that I don't know. I don't know. But we are now in December, right? And here we are. Here we are, okay? Now, that is what I wanted to show you about this slide. Yeah, that's the channel. You will not find other stocks channels on YouTube drawing this channel. They might be drawing it now because they finally see, oh, well, I guess this looks like an upward trend, doesn't it? But I drew this about two weeks ago. When I started, I drew it right around this date. I was like, wait a minute. It just looks too perfect. Okay? All right. Okay, so this is the 1 hour chart on the upside, on the ascending side. Again, see that? On the ascending side, here's the October low. October 13th low. See that? It hasn't been below the negative 60 since then. And like SPY, look at on Friday. Look at how close that is. It wants to curl back up, guys. It wants to curl back up. Or at the very least, it's just going to hang around the zero line. And that's always bullish. When you're hanging around that zero line right there, that's bullish always. Okay? So, for this next slide, I've shown this next slide before. And earlier at the beginning of the presentation, I said, I do not have a fundamental case at all, right? I talked about the layoffs, right? I talked about the recession, right? I talked about all those fundamental reasons. Why are we rallying? There's no fundamental reason to rally. But there's a mechanical reason, and they are right here. End of year, EOY, reason number 1, end of year. Mutual fund managers need to get your bonuses. You've got a month left in the year. You got to get your bonuses. You got to pump the markets up, guys. You got to pump it. You can't sit on cash. You got to pump it. Pump it. Okay? That's reason number 1. Reason number 2, stock buybacks accelerating in Q4. Well, now we're in the final month of December, so you might as well say accelerating in December, right? You have no choice, okay? Because I got this article like last week or so. Everyone knows the Fed slowing rate hikes, right? They're strictly mechanical, okay? However, as I previously said, reason number 1 and reason number 2 will be expiring on January 1st. No longer valid. And they will not be subject to renewal. Okay? As of January 1st, fundamentals will start to dominate again. As of January 1st, we will be moving back to fundamentals. Okay? And then that's when I think the bears will be coming back again. Now, if you guys are new to my channel, you're probably thinking, man, this guy's like a perma bull. He's always thinking we're going to go up, right? I just made the case today. The whole session, I made the case. This is a bullish rally. Okay? But you guys should know, for you newer viewers, my overall thesis is actually bearish. It's actually bearish. And I encourage you to check out these 2 videos that I did where I'm making the case we are nowhere near the bottom. We are nowhere near. And in fact, I think we're going to flash crash in March of 2023. Because as of January, the fundamentals are going to take back over. And there will be no technical reason, technical or mechanical reason to keep going higher. Because we're going to get into recession, right? A lot of things are going to happen in the spring. Watch out. Okay? Watch out. So I encourage you to watch these 2 videos, part 1 and part 2. One of them quantitative, the other one's qualitative. Apologize for the audio scratchiness on the qualitative. I don't know what happened there. I'm not sure. I'm not sure what I could have done differently because I didn't make a change. And my audio seems to be okay now. Okay? So check that out, okay? So there you have it, my friends. The red carpet rally. I've made the case, the mechanical case, that this is an uptrend bullish rally we are having right now, okay? The red carpet rally. Red balloons and all. But, as we approach that rally peak, it's going to be coming sooner or later. Sooner or later. Whenever and wherever that leads us to, I will be sure to alert you guys of those bearish divergences in the MACD and RSI real time, giving you a heads up, like, hey, you guys might want to start getting out of your bets. Right? If you're going long, okay? Because, at the end of this red rendezvous road ahead of us, I don't think you want to know who or what is waiting at the end of that road. So take caution, guys. Take caution. And with that, you can follow me on Twitter if you'd like more real-time intraday updates. I tend to post during the day there. If you like what you saw today, please give it a like, share it with fellow traders, subscribe to the channel, or click it to be notified. With that, I'll leave you with my calling card, Agent 00 Woe, signing off.